Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. Stock market's back open. Hope you all had a great weekend. So what do we got going on today? We got the volatility already. The Dow is up over 600 points, but the NASDAQ, not so much. It's struggling. It's fluctuating back and forth over the break-even line, over the flat line. Will the NASDAQ catch up to the Dow today? Maybe. We'll see. Now, what do I think's happening here? Well, I think we were oversold, and now we're getting that little rally, but I do think we're still going to have a downward drift here. Now, why do I think that? Okay, well, the SPY, the S&P 500, every year it comes down and touches its 200-day moving average. We didn't do that this year. Now, not every year, but almost every year. It's very rare that we have a year where we don't come down and touch the 200-day moving average. Now, we've gone about 18 months. 18 months is a long time for not coming down and touching the 200-day moving average. I think we're going to come down and touch the 200-day moving average, and we're going to bounce higher, probably up to a new high in the S&P. But first, we got to get that downward drift. This could take weeks to play out. It could take weeks, but I do think we're going down to, well, maybe even the 4,000 level on the S&P 500. We'll see. But I think we got to play that downward drift. I mean, we're only down about 3% on the S&P, maybe 4% on the Dow. I think we got to get that 10% correction. Now, if we overshoot that 10% correction, we could easily go to 15%. But I don't think this is the big crash yet. Do I think the big crash is coming? Absolutely, I think it's coming. But I think we're going to come down with this correction, hit the 200-day, maybe overshoot it a little bit, and then bounce higher on the S&P. That's my plan, and we'll probably make a new high before the crash comes. Now, a lot of people say there can't be a crash, Mike. The Federal Reserve will prevent. Oh, I'm telling you, the Federal Reserve cannot prevent a market crash. It cannot. It can postpone a market crash by printing more and more money, and that's what it'll probably try to do, but it cannot prevent the market crash. The market is going to crash, but they're going to try to prop it up here. They're going to try to kick the can down the road. Now, does it have another year in it? I don't think so. I think it's coming in 2022. I think we're going to get a big crash in 2022. About 50% would be my guess. We'll see if I'm right. We'll see how it plays out. Right now, I'm just playing the swings in this market. I'm loving the volatility. We're up, we're down, we're up, we're down. It's a good way to make a lot of money if you're a swing trader. Now, once again, long-term investor, I'm not so optimistic here. You got too much risk for very limited reward. Okay, what I want to talk today about is lobbying. Lobbying for our government's votes. Okay, I'm a real estate broker. Most of you know that. Now, I belong to an association, the National Association of Realtors. Now, they're very proud of the fact that, they go, and they don't call it lobbying, they call it educating the politicians. They educated the politicians so they wouldn't take away the 1031, which is preferential income tax, okay, like for very wealthy people that have second homes. They can take that second home and they can sell it and they can jump into a different second home and not pay any income tax on the gain. It's called preferential treatment. Now, they can also, the NAR, the National Association of Realtors, is very happy that we're not getting any of the step up in basis. For example, if you have parents, well, all of us had parents at some times, hopefully yours are still alive, but if your parents die and they bought a property back 20 years ago and they bought it for $100,000 and now it's worth $1 million. It's an inheritance. You can inherit that property and keep the $100,000 basis. Not keep the $100,000 basis, excuse me, bump up the basis to $1 million. So if you sell the property after you inherit it, you won't pay any taxes. Now, if your parents had sold that property for the $1 million before they died, they would have owned a lot of income tax on that property. But they kept this in place. They educated the politicians. They lobbied for this. Okay, now in California, we just had a recent one. Okay, we just had a recent change here in California. We have what's known as Prop 13. Now, Prop 13 keeps your property taxes consistent with the price you paid for the house. So if you bought it 30, 40 years ago, you have low property tax. Where your next door neighbor, for example, you could be paying $1,000 in property tax, but your next door neighbor, he could be paying $20,000. Very common in California. But that was Prop 13 to keep property taxes low. Okay, now they just passed what's called Proposition 19. Now, Proposition 19 was fascinating. They marketed it this way. Hey, if you're a senior citizen, you can sell your house and take your property tax basis to your new home. Okay, that's very interesting. But here was the little kicker. When you inherit a property, though, from your parents, you no longer get to keep the low property tax. So your parents' property tax might be $1,000 on, a home that's now over $1 million. So as soon as they die, they bump the property tax from $1,000 up to $12,000. Okay, that just passed because it favors the real estate people. The National Association of Realtors, we have a very strong lobbyist. The California Association of Realtors, we are the ones that put that in play. Now, personally, I think it's a very bad proposition, but it's the way they're phasing out Proposition 13 to raise the property taxes when parents die and their kids inherit property. Okay, so the property taxes are all going to be pretty soon on a level playing field. But they send these lobbyists to, the government, to your representatives, to your governors, and they educate them. But they educate them with a lot of money because there's let's just roughly say there's 1 million real estate agents that belong to the National Association of Realtors. Now we each pay about $50 to the organization every year so they can go and lobby. That's $50 million. Now, they can go give this money to the politicians any way they want. They call it lobbying. I call it buying the government. I think it's wrong. I think it's very wrong. Now, here's the one that really, really fascinates me. Okay, this one really fascinates me. The hedge funds people, the richest, most wealthiest people in the United States, they make billions and billions of dollars with their hedge funds. Okay, so they go, do their lobbying, and they pay hundreds of millions of dollars to both parties, both the Republican Party and both the Democrat Party. Now, why do they pay it to both parties? Why don't they just pick one? Well, they're not sure who's going to win. So they want to make sure that they got their money in place. They want to make sure they gave hundreds of millions here and hundreds of millions there. Now, why do they do this? It's called the carry interest rule. The carry interest rule states that basically if you have a hedge fund and let's say, you're managing maybe $10, $15 billion and, $1 billion in profit comes in. Well, your part is taken, that's called 50%. So you make $500 million. Well, as a hedge fund guy, I don't want to pay tax on $500 million. No. So the carried interest rule allows me to pay my tax at the capital gains rate down here at 20%. Now, if you made $500 million in a working job, a real job, you would be paying up here at the 37 to 40% rate. So do you think it's fair? What do you guys think? Do you think that's fair that the hedge funds get to buy our government so that they can pay a tax rate that's half of what me and you would pay if we made those millions of dollars? Now, most of us don't make millions of dollars, so we go, Mike, I don't have to worry about that. We don't make millions of dollars. Yes, but they do. And your taxes would be lower if they paid the actual rate. Now look at when I was in college, I actually wanted to get a hedge fund. That's what I want, the business I wanted to work in. I went to real estate instead. I probably wasn't cut out for the hedge fund market, but my brother-in-law, he went into the hedge fund market. But the hedge fund market, they get this preferential tax treatment because our politicians and government's for sale. I do not think our government should be for sale. Now, that's just my little rant for the day. Leave me a comment if you think our government should be allowed to be bought by wealthy people, by the National Association Association of Realtors to protect the rich people, the ones that have 2, 3, 4 properties out there. Some of them that I know, some of my personal clients have 10 and 20 of these properties, and they keep selling, keep turning over, and they don't pay a penny in tax. Not 1 cent. They don't pay. The hedge fund people, they pay hundreds of millions of dollars so that they can save billions of dollars. I mean, our government's for sale, and I think it's wrong. I think it's got to stop. I think it's got to change. But that's what's going on right now. That's my little rant for today. So back to the markets now. Back to the markets. We're having a big day in the Dow today, but I do think we could get another day tomorrow. We could easily. We could still get a little more run up. I mean, but I do think we're going to get that 10% pullback. I think the S&P is going to come down to that 200-day moving average. Just pull up the SPY. Pull up a chart of that, and you'll see that we're not even below the 50-day moving average yet. So far, the 50 days held, but I think we're going to break through the 50-day and hit the 200-day, and it could take several weeks to play out, but I just use a little bit of caution here. If you're a long-term investor, you have a lot of risk for a little reward right now. If you're a trader, a swing trader, we love this market. We love the volatility. It's playing out very nicely. I mean, you just get the big swing up, you go in with your puts. You get the big swing down, you go in with your calls, and it'll revert back. But it's got this downward drift. I'm playing it a little more to the downside than I am to the upside, but I am a swing trader, and I love this market. I hope you're all having a good time. Anyways, if you like this stuff, give me the thumbs up. If you really like it, punch the subscribe button. Get out there, everybody. Have a great Monday, and we'll talk again real soon. Bye-bye now.